The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 17th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a terrific Thursday. It is fabulous Friday. It's fantastic Friday. Let's make sure that you and I do everything we can to have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. That little 2x4 exchange will make all the difference in the world for each of you, for everyone that's in your life. The reason is because it means you can find a gift in every set of circumstance that life is going to throw at you. And that's what the role of life is. That's the role of the universe. It's also the role of the markets to always throw circumstance at us for each of the bulls and the bears out there. We're going to take a look at those circumstances right now. We've got the Dow futures up 156 points, but I want you to understand that I am grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial in at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. That way, you and I, we can go hunting for those bulls and those bears. It is Fabulous Friday. Of course, none other than Tiger Financial News Network. Thank you for checking into the Hotel California. I'm Steve Rhodes. Welcome to the show. Right now, Dow futures, as I say, off 156 points. S&P down about 14.5, trade down at 2,086. NASDAQ futures off 38. They're traded at 43.77. Russell 2000 leading the charge, the downside off about 12 points right now. U.S. dollar index up 25 ticks, trade out at 97.87. There's a bit of movement inside the currencies. Goldilocks not doing too much this morning. Up $5, trade down to 12.02. Silver's just up a penny as we speak right now. Light sweet crude back 41 cents. Excuse me, trading out at $56.29. Let's take a quick peek across the globe, see what's going on out here. Now, you've got the DAX is off 220 points. FTSE is down 77. I expect I saw all sevens. That must mean I should go to Las Vegas and you get all sevens. That's a good thing. Is it not pull the slot machine? Not a slot machine kind of guy, though. That's the problem. But let's go take a look at the FTSE. What's it mean for it to be down 77, 78 points right now? Doesn't mean a whole lot until it gets below 69.50. You're trading at 69.82. Remember that 69.50 level. If I switch over, take a look at the weekly chart. That's the area that the FTSE is trying to break above, which it did with conviction. Nice wide-ranging bar. It did that last week. We'd seen it break above it a couple weeks prior, the week that began March the 16th. We'll see if this level gets tested, if it can hold. If it can't, that price probably moves all the way back down to about the 67.54 level. This is the area where the FTSE is trying to break out of like a 16-year consolidation pattern out there. If we go take a look, let's leave it on a weekly chart here. Let's go take a look at the DAX out here. DAX is off 219 points. This is the first time from a weekly standpoint. Let's take a look at this. Let's blow this up on our chart out here. DAX has made the 1 to, it hasn't completely made the 1 to 2. A to B equals C to, it most certainly did the 1 to 1.618. It was kind of in the middle of those two floors from a price projection standpoint. But what we can see, first time we've seen a bearish reversal signal inside the DAX since December. The week that began December 8, 2014. Otherwise, it's been a straight line move to the upside out here. So what does that mean? It means that there's likely some type of retracement. If we take a look at that retracement just simply from the A point, the low back here in October of 2014 all the way up to the high from last week, DAX could be a heck of a move. People would be calling for the DAX to be over. Not you, not I, if it moved down just simply the 0.382 retracement level, 10,849. I'm not going to use that as my target as we speak right now, but that's the first possibility. That'd be the first place. Now, over in Asia last night, a real big out here. This is going to be really interesting when the market opens Sunday evening, because if we take, this is the weekly chart, but I'll show you the daily chart here. This is specifically for the Shanghai. Now, the Shanghai actually gapped up last night. And what the Shanghai could do, because we'll see how today's markets end here. If the markets end poorly inside of the U.S., there's a real good chance of what you would see is an island top reversal inside of the Shanghai. You can see this gap that we had out here. The prior day, that was Thursday's close, you had a high of 43.95, and you can see the low here of last night was 44.41. So there's a gap out there. You know, island reversals are actually cool patterns. Number one, they're the most bearish candlestick reversal signal. It's not a Japanese candlestick pattern, by the way. But it is the most bearish pattern. Now, the cool thing about that is that when those patterns fail, there's nothing more bullish than a failed bearish pattern. And I suspect that's what will happen over the long haul out there. The Shanghai was not that far away from getting up to its 0.618 retracement, and it still may get up to that 0.618 retracement level, 46.42 out here. Now, let's go take a look at our markets. Let's go look at our markets here, because I know that's what you want to know, what's going on. Now, yesterday, we took a look at yesterday. If you didn't catch the first hour, I guess I spent at least the first two segments, probably the first 2.5 segments. And the question was taking a look at the futures inside the S&P, as well as taking a look at the cash index. What were the clues out there? And in the future, let's just go back and take a look at it. We had two time frames that gave us that wonderful seventh inning stretch pattern out there. That's where the market makes a move up into a Chapman wave seventh inning stretch, which is the G formation. The G candle out here. Now, what we have seen, the market pulled back. We saw a nice little bounce yesterday. Never took that out. If it never gets taken out, actually what it does is it's the easiest trade setup in the world out here. And obviously, you like to try to get into the trade as close to the top of that seventh inning stretch candle, because your stop is one tick above the high. One tick. You don't get, now that's totally outside of the normal method that I suggest anyone use for entering a trade, which is not to use tight stops. You use the stops that you should always use. Always use. You hear me? Always use stops. But the stops that you should always take a look at, folks, are understanding the average true range of whatever it is you're trading. You see, each stock, each ETF, each currency pair, each futures contract, each everything has an average true range. And if you place a stop that is so tight that is within inside that average true range, just normal daily movement is going to take you out. I don't want you to be right on the trade and wrong on the stop. And oftentimes that's what happens, especially in volatile markets. People think I ought to make tighter stops. It's just the opposite. You need to make wider stops. The only thing that changes with regard to using a wide stop or a small stop is the number of shares you purchase. That's called position sizing out there. And that's really important when you trade. You've got to understand that your risk is your risk, right? Your risk is nothing more than a percentage of your capital. That's the first math calculation that's out there. Anyways, I don't want to get into that endeavor, but if you don't understand position sizing, come on over to the homepage of TFNN.com, sign up for my newsletter service. There's a 90-minute workshop that's for free that will teach you about position sizing and how you really ought to take a look at stop management. The only exception to that rule is this seventh inning stretch pattern, because it either works or it doesn't work, and your stop can be so close to the top of that it's a beautiful thing out there. In any event, what are we looking at here on a 30-minute chart right now? Well, what we're looking at is you can see that the futures dropped off. There's a number of different reasons that people say that they've dropped off. But let's face it, when we took a look at the market yesterday, all those reasons that people are putting out there, we were looking at where the market is giving us a signal of a short-term top. If it wasn't, I wouldn't have my my newsletter subscribers on the short side of the S&P 500, right? I mean, if we didn't have any short signals out there, we wouldn't have flipped from long to a short at I think it was the beginning of this week. I can't recall. Out here, when we got the seventh inning stretch candle and a couple other things out there. So that being said, what we've seen here with regard to the move down this morning, all right, is we saw the market move down, got to a low inside the ES mini. Right around the 6:30 time frame, got down to 2,082 and a quarter. Now, we've seen a little bit of a bounce here. And on the 30-minute chart, if you're watching us on TigerTV, you can see the current TAS market profiles. The resistance level, 2,090.75. That bodes well for what? That bodes well for the sellers out here. But the real key is going to be closing below 2,083.95. At this stage, we'll just say, because that's the market profile low, it's actually set up here to be in to be in line with to the benefit of the buyers out here. But I'd have to say not so fast because that wide-ranging bar to the downside. But time will tell. But expect 2084 2084 to act as a level of support. In essence, it has done that thus far. I don't believe that it's going to hold. I believe we're going to continue to see more downside, but that downside is going to be limited. It's not going to be for a long duration. This is not it. This is not the ultimate in the tops out here. That's just not the patterns that are in play inside the market. So don't get too freaked out, and make sure that you're using stops no matter what side of the trade that you're on. If we take a look at that 120-minute chart, it too had that seventh inning stretch candle out there. So we saw that. That was in play, as we talked about yesterday. That was giving us an indication as to what was going on. When we switch over, we take a look at the cash indices out here. We talked about the Arthur Murray dance steps. Give me a moment here. Let me switch over to that set of the charts, daily indexes. So if we take a look at the cash S&P, remember I turned off the Rhodes momentum indicator colors out there. We saw the dance steps of A, B, C, D to the downside. Nice bullish candle as it formed that fourth move to the downside. 4 steps to the upside, 4 steps to the downside, 4 more steps to the upside. What do we have here? We said yesterday, if yesterday's high was not taken out, you had 4 steps to the upside, you know, where the market has moved. So now we're going to see if we're in the true Arthur Murray school of dancing, and we see 4 more steps to the downside. That being the case, then that says that the markets go down at least through the end of next week. Probably I'd have to do the countdown then. I'm not going to do that. But we'll see if that is the case out there. We'll take a look at bottom. So before, whatever it was that was put in the press, all you really had to do was turn into the trader's edge to understand where we're at in the market and just simply be very cautious out there. So that's what's going on inside the S&P. If you're wondering, hey, where is it that the futures might take us down to? Well, if we break that low that we were taking a look at as far as the TAS market profile, that was on the 30-minute chart out here. If we switch back and take a look at the daily chart, the old resistance line is 2069. Old resistance should become new support. So that'll be one area for us to take a look at. If we take a look at retracement levels here, because we use a number of different gauges to be able to identify where price targets are. You always want to be able to have a price target. What we'll also see is that just simply the dead cat bounce 0.382 retracement. We're not there yet. 2076. Below that, you're looking at the 0.618 retracement level of 2059. So your areas of support, potential support here, or our target areas with regard to any kind of retracement, 2059, 2068, 2076. Those are the areas to be watching. Of course, what do you and I always look for? We look for bullish reversal signals as prices move down there. We look for wave patterns. We look for all of the above. If we take a look at the NASDAQ out here, let's go see what's going on inside the NASDAQ. We'll have to do that when we get back from the breakout here, but we can already see from the low, from its low out here back on April 1st, April Fool's Day to the high, it's already made the 0.382 retracement a couple of times. That says any close below 43.71. We're looking at 43.29. Steve Rhodes with TFNN. Be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Went to that break, we were taking a look at the NASDAQ futures. So if you're watching this on Tiger TV, we can see the consolidation pattern that has formed inside the NASDAQ. The beginning of the consolidation actually beginning February the 11th, 2015 out here. And that trading range, that consolidation, is between 4270 and 4470 out there. So you've got a nice 200-point consolidation. Now, our expectation, if 4344 fails, meaning we see it close below that on a daily basis here inside the NASDAQ, pretty good chance that we take another run, or the market takes another run for that hammer candle that was formed out here on March the 26th. And that's right at the bottom of that consolidation at 4270. Whichever way the market cracks, so above 4473 or below 4270, what it gives us is a price projection of another 200 points to the upside or to the downside. Hey, let's go to Bob in Hartford, Connecticut. He wants to talk about the Houston Astros and some type of trading that they're doing out there. Bob, how you doing this morning?
I'm doing great. Thank you, Steve. I had a quick question. I know you track the moon cycles, and see we have a new moon coming up on the 18th, and do you consider that bearish, number one? And number two, what's your opinion of the moon cycles with trading?
I have with regard to your question and moon cycles, when I do pay attention to them, and when they work and we start to see them cycle and work, then yeah, I pay attention to them. I haven't found them to be the most consistent. with regard to the new moon and or the full moon. The only place where I found the full moon to be most consistent, and for me, it's always looking for a high probability. And if it works sometimes and doesn't work other times, it's, you can flip a coin for the most part. And so with regard to the full moon, where I've seen it work the best is I've seen it work the best inside of gold. I can't tell you the reason why, but I can tell you that 8 times out of 10, it marks an initiation move, either to the upside or to the downside. And I'm not going to spend a lot of time trying to figure out why. I just know that it works, and therefore I absolutely pay attention to it. With regard to other planetary cycles, I built some software many years ago, downloaded the entire ephemeris digitally for 300 years worth of data, and started to do some studies because I said, hey, we're all looking for an edge out there. So I went ahead and took the celestial patterns, planetary alignments that were most known to have impacts, whether it was on wheat or whether it was the S&P or whether it was on bonds or whatever it was, and was then able to go ahead and digitally place each of those on a stock chart to look for significant probabilities and edges. And I can tell you that within the last 5 or 6 years, I haven't found any kind of edge that is consistent that we can go ahead and use that. And that's with regard to celestial planets. I can tell you that yesterday, Pluto went retrograde. It was like last night at about 10:30 in the evening. But the same thing that was taking place at 10:30 in the evening was the most recent perigee lunar phase. That is when the moon is closest to us during this cycle. Now, what I can tell you is that the lunar phases of perigee and apogee, those work really well. Those are patterns that you absolutely should be paying attention to. But that's my experience. Tell me about your experience.
Well, I've just been doing some research, I'd say the last 6 weeks or so, and I've been looking at the market, and for after a new moon or a full moon, tracking the Dow 3 days after that moon. And it seems to kind of be correlating, but I do know from other folks that, the indicator goes into phases where it's highly correlated, and then it'll go through other phases for a couple months where it's not working at all. So
exactly, and that's my personal experience. That's my testing experience. That's my, but yet, I've also gone back and tested the full moon on gold. Go take a look at the full moon, go apply it to a gold chart, and then watch what happens. And you'll see consistency there. And that's where, so which phase are we in? How are you going to know as a trader? I think that you start taking a look at, so you should be aware of those things. It'd be like driving, in the old days, we used to go to AAA to get a triptych if you're going on a long route out there. That would help you understand where the construction was, if you're going from Detroit to Florida along I-75 or something. So I think that for those people that pay attention to lunar phases like yourself, you still want to have that as a triptych and be aware of what's going on. But there are other patterns out there that just have much more consistency than those. But if you trade gold, absolutely pay attention to the full moon all the time. All right?
Sounds great. Thank you, Steve. I always learn something with you.
Oh, thank you. Thanks so much for calling. Have a great weekend. That was Bob in Hartford, Connecticut. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. BFI off 145 trade out of 17,960. The S&P down 12 at 2,092. Composite off 39 points at 49.68. Russell 2,000 down 11 points. She's trading at 12.61. The DAX off 211. FTSE's trading out at 69.96. Gold's up $3. Silver down 3 pennies. Light sweet crude off 78 cents, leading the charge to the downside. CE is the ticker symbol. It's Cleanse Corp. That's up 11%, up $6 and change. Wonder if they're out with numbers here. Not that yeah, they're out with numbers. Their net sales, $1.4 billion versus $1.7. So missing the top line big time out here. Nonetheless, it is getting the benefit of the doubt. Receptos Inc., RCPT, that's up 3%, up about $5. 58.com, Wooba Wooba, which has had some nice signs of strength here lately, up 5%, up $3.40. Schlumberger up $1.72, Mattel up $1.50. To the downside, ServiceNow, NOW is the ticker symbol, down $9. Google's off $6. Clovis Oncology down about $9. Tableau Software, DATA is the ticker symbol. That's off about $3.40. Let's stop in real quickly here, take a look at the summation index for all three of the markets that we follow. The New York Stock Exchange, the composite, the Dow, they're all down below the zero line. It's key. The key is where does it end the day? But if they all end the day below the zero line, Then it says certainly sellers are in control. Hey, big whip there, right? What's probably most important for us to pay attention to, I mentioned the Shanghai earlier and the island reversal pattern that was present in it. I wanted to wait to see how the market was going to open here. Now, if you take a look at the New York, let me do this here. Let me move off of this chart. We'll move over to a different chart where I can maybe, here, I'll do it here. It'll be a little bit cleaner. So let me put in the New York Stock Exchange, $NYA, then I can blow it up here. So we're going to do that. And we're going to pull this back. So now it's nice and big out here. Today's really important for the NYSE. What I want to show you is that the top, now this is good for both the bulls and the bears out here. Potentially good. Somebody's going to say where you can come up with the good news. So if you take a look at the New York Stock Exchange, on the trading session here for April the 14th, the actual high was 11,117, and the low of April 15th was 11,136. So between 136 and between 117, what's that about, a 14-point move? We've got a 14-point gap. Now you can see yesterday we had a nice little doji, high wave-ish style candle. We'll call it a doji candle out here up at the highs. What's more important, though, is that right now today we've seen a gap down. So we have an island reversal. I'll draw the, try to draw the little arrow to it just so you can see it. So, you remember you can catch the archive of this show if you listen on the radio or your mobile device at TFNN.com. Here's our little island out here. Now, an island reversal is absolutely, both at the top or at the bottom, is absolutely the most bullish or the most bearish pattern that you can find. Now, I'm pulling the NYSE chart back just to see if I can scope out any island reversal tops or bottoms. So I'm already back to October 2014. The answer is no. Now, this is at all-time highs, which is different than taking a look at the Shanghai out there. But at all-time highs, New York Stock Exchange today, potentially, if it doesn't trade anywhere up to, let's see, 11,171, 11,169. If it doesn't, let's call it 11,170. If it doesn't trade up to 11,170 today, then the New York Stock Exchange has given us the absolute most bearish pattern that you can get, island reversals. We talked about that earlier. Let me just pull this back. Let me just see if I can find any others that might be present out here, just so we can take a look at that behavior. They are hard to find. They are hard to do. They're really hard to do at all-time tops out there. I can tell you that because, during workshops and doing workshops, I can go back and try to find those things. We did have, let me see, did we? No, we didn't. We didn't have one there either. Let's see. The high was 10,361. The low was 10. No, we did. We had a small little island top back here. December 31st, 2013. Now, the high was never taken out. That led to a pretty decent move down into February 2014. So there's an island top reversal inside of the New York Stock Exchange. Now, the key about it is that when the top does get taken out, if it does get taken out, then what you've got is you've got the most bearish pattern failing, and there's nothing more bullish than a failed bearish pattern out there. And island top is most certainly one of those. So inside the NYSE as we speak right now, that's also given us a fairly significant message. We're not even anywhere close to the end of the trading session, so we have to see how the day progresses. But the combination of that, and we go back and we take a look at the summation index here for the New York Stock Exchange. It's been giving us signals here. I'd say the signals really began getting clear April the 10th out here inside the NYSE that even though it was moving to higher ground, that there were some problems in River City. So now we're going to find out where those problems take us to. And inside the New York Stock Exchange, levels that we really need to watch. And there's a couple different ways to benchmark it. The first area to be focused on is going to be April the 1st, April Fool's Day, because we had a nice hammer candle down there, and that's a really important signal as well. So as we take a look at from that hammer candle to the high here of yesterday, let me try to widen this up a bit, pull it down so we can take a look at it. There we go. There's between the hammer candle. 11,062 is going to be our first target. I would expect that at 10,974, that's your 0.618 retracement. That's where we start taking a look at things. We start taking a look at the oscillator, see where it's gotten down to. If we can get down to a minus 200 reading, that probably is going to be the extent of the move to the downside. You're at minus 61, so it's got quite a ways place to go. But we got to see how the day ends up. Now, if we take a look at if we take a look at the composite or take a look at the Dow, no such thing as an island reversal pattern out there. So it's only inside the New York Stock Exchange. New York Stock Exchange, how often do you hear anybody talking about the NYSE in any of the other media shows out there on television, radio, what have you? I'm suggesting to you that you really need to be paying attention to the New York Stock Exchange. We'll get a message with regard to the next reversal. I do expect that we're going to see one. It's just the sell-off that we've been expecting. We're going to go ahead and see the market find a bottom, and that's Stevie's saying that even in the face of that island reversal top. And the beauty will be, and if my inclination, and more than an inclination, the other patterns that I'm looking at in the market are correct, we're going to see that get taken out, and that's going to bode well for the markets moving higher. But look, I like to take this one day at a time, one moment at a time. You know, I have my strategies already written down in advance to know what to look for, and then I don't just do that blindly. I wait for some type of signal out there to give us some type of confirmation. For me, it's not about buying the bottom tick or selling the top tick, although it's nice to do it. I've really only done it twice. I've been really close a couple of times, such as March 6th, 2009, when I flipped to completely long positions. And I remember that was scary for a couple of days. That was a long weekend. I do remember that long weekend out there. But in any event, you know, all you want to do is you want to wait for some confirmation and some signals out there. Now, that's what's going on inside the New York Stock Exchange. Let's go take a look at some other things here that are moving. And right now, Dow's off 192. The S&P's down 15. So again, if we take a look at, let's go look at the currency pairs out. Let's go take a look at the euro, Japanese yen, which had also been giving us a signal that there was some problems in River City. Now, the opposite is true right now. And when I say the opposite is true, is that the euro-yen has not been able to crack down below the March 13th swing point. That's priced at 126.91. It's been tested and rejected several times. We're seeing it sell off just a bit here. So the same thing that gave us a signal that the market's moving higher, that there was going to be some type of problem. This is before supposedly computers went out, things of that sort. You know, Bloomberg terminals. And look, folks, you know, you don't think that Bloomberg terminals, or the folks that use Bloomberg terminals, don't have backups and other systems out there? Come on, you know, that's nonsense out there. In any event, if we take a look at the euro, Japanese yen, that's, you know, doing a pretty good job of holding its own. It's a great liquidity indicator for us. With regard to today's market, you know, we should see a pretty decent jump in the VIX index. Let's go take a look at it. Let me see, what's this trading up? It's already trading up 10.6% out there. You know, if it's above 10% by the end of the trading session, you know, we probably see a bounce that begins Sunday night, Monday. That doesn't mean that it's the end of the move, but I'm just giving you an expectation of what to look for out there. That way, when you see it, you can say, shoot, that guy's pretty good. PGA player out there. In any event, don't know where the heck that came from. Let's go back and take a look at some things here that are moving stock-wise. So currency-wise, you know, the euro-yen is doing a pretty good job of holding its own as we speak right now. With regard to the euro itself, you know, you've got the U.S. dollar index. It's up just a bit, mostly caused by any kind of pullback that we can see. Well, the euro is not doing too shabby with regard to the U.S. dollar index. Yeah, really not too bad at all as we speak. Japanese yen, okay, Japanese yen's got some movement. Let's go take a look. I believe this has an A to B equals CD pattern. Yeah, it's still's got the A to B equals CD pattern that's in play. Price is traded into the hammer candle, about halfway into that body, maybe a little bit lower. That's actually where you would be buying, and your stop would be below the bottom of that hammer candle, which is priced out at 118.33, and that is the Japanese yen versus the U.S. dollar index. If we take a look at, let's go take a look at some stocks here, see how they're moving out here. Let's take a look at Now, Service Now, down about 11%, off about $10. As we take a look at Service Now, gapping down, pretty good volume behind the move here this morning. Had a pretty good volume day yesterday, but let's see where this thing is going to try to trade into. It's got a little sign of strength that it's pulling back into, but it's doing it with too much volume. That's the first sign of strength here that we're noticing. That took place on January 28, 2.6 million shares to the upside out there. You've already done 1.9 million shares. So that becomes our natural target, still this breakout area. The actual following day, 3.7 million shares on January 29. So that's a strong area of support. We'll see what volume is doing as it comes back into that breakout area. If it can start to slow down, then what you're probably looking at here, because of the gap down on a high volume bar yesterday up at the highs, you're looking at some type of consolidation, most likely between the 62 or 66 area up into about $82. Let me put this on a little bit longer term time frame, see if there's anything else that we should be paying attention to here. Let me look at the monthly. Yeah, I'd say that's really all that we need to focus on and pay attention to at this moment. That is in service now. Let's go see what else is going on to the downside. Let's take a look at Biogen, BIIB. If we take a look at Biogen off $6.85, down 1.6% out here. Biogen still has that high volume high. Eventually, Biogen is going to should make its way all the way back to that March 20th area, 10.6 million shares. Prices so far has been coming back into the breakout area, which at this stage we'll just gauge as that level right now being the April 1st low. 2.7 million shares. Price is traded down into that today. The top of that candle is 423.47. Volume there is 2.7 million shares. This is done 200,000 shares so far. Any close inside 423.47, and very likely you will see 407.55 to 410.50 get tested as a possible level of support. If we look at, let's go look at what's moving to the upside out here. How about Netflix? Let's go take a look at Netflix. NFLX up another $5 here this morning. Now this thing, what a monster of a move. Of course, the first move inside Netflix began where that sign of strength came off of the bottom here on January 21st with 9 million shares to the upside. But it was followed by an encore presentation of 14.9 million shares yesterday. So that's a big move. Now, there's a 1-to-1 A to B equals CD that takes you up to 579 out here. I can tell you that the last time the last sign of strength on January 21st that Netflix had, price never came all the way back down to the bottom of the gap out here. But let me see if there's some long-term. There's nothing. There's really nothing bearish here about this stock. Maybe price comes back. Price eventually will come back into the, at least test the bottom of the gap. The 530 area out here. And if it gets below 530, then somewhere in that gap out there. But if you're a holder of Netflix, congrats to you for sure. We've got, let's see, what else here percentage-wise we can take a look at. Let's look at Seagate Technology, STX. That's up 3%. See if there's any reason here to take a look at Seagate. Now, in the case of Seagate out here, I don't know why I pulled it. Let's just see what it's doing. It looks like it's actually changed its trend out here. If we take a look at, use just some channel work out here, and on the channel work, let's see, that looks like a pretty good channel right about there. Yeah, it really is. So what we're seeing take place here, I'm not going to worry too much about getting the bottom correct. Whoops. But I want to take a look at Seagate. And so here's your price channel. Now, in the price channel is what we're using the body of the candle. Body of the candle absolutely is the essence of price. These extreme emotions are these wicks that we take a look at. Now, in the case of Seagate Technology, it broke through that price channel on April 15th, came back yesterday and tested that. That's really what you like to see. You like to see when you break a rising or descending price channel. In this case here, it's descending. You like to see price come back and test it and then reject it. And that's really what's happened. You've got Seagate Technology headed for that swing from March the 2nd in the gap. So probably headed for the 61.02 to 63.39 level. Folks, this is TFNN. Right now, Dow's off 237, S&P down 19. Right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 215, S&P down 17, composites off 54 points. So let's go take a look here at what's going on, the important areas to be watching right now inside the market. First of all, let's take a look at the 120-minute chart here for the ES Mini, the one that gave us that nice little seventh wave pattern to the upside here. If you're watching closely on my screen, we've got these red horizontal lines. I probably wish I could maybe see if I can change them here real quickly. See if I can change it to black, maybe make it a little bit easier for you to see, and I'll make it just a tad bigger. So let's do that. This way you're not confused, because there's other horizontal red lines. I don't want somebody. So there we go. So now we got these black lines. That's a consolidation box that the ES Mini had been traveling in, and it broke out of. I think it's like 30 or 40 point consolidation. Now it has not fulfilled that objective. That being said, though, you get to that seventh inning stretch candle you do with less relative strength out there. It's always a natural problem. Now, when you break out of a consolidation, these are sideways consolidation levels. When you break out of a consolidation, price comes back and tests that area to confirm that it's real. The ES Mini right now is coming back for its second time to confirm whether or not it's real to both you and I. And that's right around this 2070 ish level. I don't know whether it's 2075, 78, but we're right in that ballpark, in that range out here. We can see the last time down was back at about 12 noon. This was back on April the 14th. The point is that if price closes below that, it's really a signal to us that now price could move all the way back down to the bottom of that consolidation, which is right in the 2040 type level. So you see it close below that, and I suspect that it will. But look, I don't know whether the truth is I don't know whether it will or it won't. What we do know is it's very easy for us to identify what's price doing, where's it at. That way you can make decisions if price gets rejected or if price flows back through this level. My suspicion is that it's going to hold, that it's going to break through this level. But only time will tell. But that's an area truly to be watching today. So, folks, have a fabulous weekend. I'll look forward to seeing you bright and early Monday morning. Stay tuned. Tom O'Brien's going to have a market update for you. And have a great weekend. Take care.